February 17th, stock playbook. Dow Jones up 45 points, 0.3%. NASDAQ Composite was down 8 points, 0.2%. S&P 500 up 3 points, 0.2%. Okay, markets closed Monday for President's Day. Supposedly we're going to get a Greek bailout, and that's all going to be taken care of on Monday, so the market's going to rip higher on Tuesday. I'm not buying it. I'm just sharing with you my opinion. We've been a day or two away from fixing this Greece problem for the last 7 months. We've known about this problem for the last 10 years. This problem will not be fixed with a bailout. If they do this bailout, they are just, in essence, kicking the can a little further down the road. I think the reason this time that we constantly keep stringing us along, bailout next week, tomorrow, next day, for the last few months, they're getting us prepared to let them fail. There's going to be a default. I've been saying that for months, and I continue to think that is the case. What does that have to do with our market? Probably nothing. But perception is almost half a reality. The market continues to hit new highs, but 3 points, 5-point moves up to new highs, I'm not concerned. If you look at the weekly chart, the level in the sand right now is 1370. Why 1370? Because that's the high from right here, going back to April of last year. If we break through 1370, I would say we probably hit 1400 within a matter of a day or two afterwards, because there's going to be so many buys on the other side that it's going to move it up. Ultimately, I still think it's the beginning of a bull trap. I don't see any conviction behind this lift. That doesn't mean it can't continue to have legs. We've participated in this rally for some time. We had this sell-off. We had an end-of-year bounce. We said it could last into January, and through January, we said it looks like it wants to continue lasting. It's only the last couple of weeks that we're saying, okay, enough is enough. We have a date with 1300 again. I still think that's the case. If you disagree with me, that's fine. We'll give you stocks to like to the upside. Now, more importantly, for you subscribers, we're sending out intraday alerts. We don't do them often, okay? They only happen when we make changes to the portfolio or additions or subtractions to the focus list, or if I find something really urgent that I want to tell you about. We had CJES the other day. I sent out an intraday alert when the thing was at 18.5 saying buy it. That was yesterday. It went to 21.5 today. Nice solid move. We still like it going up. Today, there were 2 cents. We got rid of the AEA. Sorry about that. AEA, we sent out alerts saying we got rid of it and sold it. They got bought out. We're done. We took our 45% gain from when we started buying the stock, and now we're done. So you should have been notified of that. Then, probably 10 minutes later, we replaced that in the stock under 10 portfolio or focus list with ZAGG, Z-A-G-G. Right at these levels, actually a little higher, 972 or whatever. ZAGG manufactures protective film coverings for the surface of electronic devices under the Invisible Shield brand name. It's an Apple play. You buy a smartphone, they tell you to buy this little sticker that basically you put on your phone or your iPad or whatever it may be to protect it. I like ZAGG. They have earnings coming a week from Monday. I like the company into earnings, so I started buying stock. From an investment standpoint, I'm already sitting in the $5 calls that we bought back in December as when we were bottom fishing on this, which we're already up a couple 100% on. I continue to hold on to those. But ZAGG, Z-A-G-G, an intraday alert was sent. If you did not get an intraday alert regarding ZAGG being added to the portfolio, and if you would like, if you have a second, send me an email, dave@thestockplaybook.com. Our servers that we use are hosted. Long story short, I don't want to get into it all, but needless to say, it's been a rough week, especially right after the World Money Show. They were flagged for spam. So we're having issues with our intraday alerts. They told us that it will be fixed by today. Today is today. So if you didn't get it, let me know. We're still working out the issue. It will be fixed over this 3-day weekend. Hopefully everything will be back to normal next week. But that's my piece on ZAGG. Moving on to other focus list stocks. Fusion Isle, all I could say is yes. We stayed with it. We said it was a great opportunity to buy down here, and if you did, you were rewarded with a really nice move today. A nice, solid, almost 10% move higher. Actually, better than 10%. 13.5% move higher. We continue to like Fusion Isle. There's rumors circulating about Intel maybe being interested. $40 is being discussed. For the record, I don't think Fusion IO will be interested in selling at $40 a share. I believe the stock goes much higher than that someday. It won't be in a straight line. If Intel refutes these rumors, this stock could just as easily pull back, providing us with yet another buying opportunity. www.web.com, good earnings, stock shot up to 15. Here's one of our stocks under 10 that just continues to work. We continue to like it. Wisdom Tree, WETF, moving up, getting above its 200-day moving average. I like the volume to the upside, continues to look good. ASPS, another new high, heavy volume to the upside. As I said with CJES earlier, you just sit back. We're just sitting and enjoying the ride. I like the stock longer term. I think this stock goes much higher. Ubiquity Networks, I got an email on that today from Cindy. Cindy asked if I thought it was a good buy. Yes. Ultimately, I like the stock. No, I wouldn't buy it up here. I want to see it pull back towards the 50-day moving average. At the 50-day, I'll get long, a close under, and I'll get out. That's the way I choose to operate. You don't have to follow me. You could buy it here if you'd like, if you can handle a $3, $4 pullback if the market rolls over. Maybe even more. Heckman, HEK, another nice bounce today. Recaptured its 10 and 20-day moving average for the first time in some time. Heavy volume to the upside needs to be on your radar. Make My Trip, MMYT. We like to talk when they're buyable. You know, I ring the bell. I'm ringing the bell. Make My Trip. I talked about it the other night. I'm talking about it now. Just like I was talking about Fusion IO the other day. Does that mean this one's going to go up 13.5% in 2 days? No. I have no idea when it's going to go up. But this is a company that I like going forward. They are the Priceline of India. Okay, I don't know how else to put it. 21.53, whether you use 21.5 or 21 as your stop level, you have a small downside, barring the horrible gap down potential, which I'm knocking on wood that that's not the case. But Make My Trip is a name I like from an investment standpoint, and I think you should be looking at it. Jazz Pharmaceuticals. Pulled back today. I almost sent that an intraday alert because this one at $50 was not interesting or intriguing into their earnings, but at 44 it is. So this is a company that's got earnings coming shortly. I would use the options, but keep Jazz on your radar. And Tango continues to be one of my top 3 or 4 stocks right now, depending on my mood in the day. Continued its schizophrenic ways. Up big, down big, up big, down big. But up, down on lighter volume. Up on heavy, down on lighter volume. Heavier than average, but down on lighter volume than we're seeing to the upside. Any weakness in Tango, I think, could be bought. INVN, we didn't put it on the focus list yet. I still think maybe it comes in some more, but INVN, for those of you that are looking for a name, this is one you need to have on your radar. If this thing shakes out, you need to be ready to pounce. HMS Holdings, they provide cost containment, revenue recovery, reimbursements, and benefits coordination to government health care programs. It's a pretty good business to be in right now. Good revenues, good earnings. They sold the thing off. This is a name we've looked at in the past. Again, if you like it, when you get these sell-offs on earnings, buy them. You can get nice reversals for trades. But HMSY is one we like as an investment on any weakness. RealPage RP. This is another one. On-demand software solutions for managing, screening, leasing, and accounting in the rental housing industry. 2 days in a row. They didn't like the revenues and earnings. The guidance was lowered. But here's what I'm looking at. An $18 floor. $18 floor here. Today at one point we dropped down to $18.43 before reversing and closing in the upper half of its range. If there's anything to be bullish about a stock that's dropped almost 20% in the last 2 days, that's it. Heavy volume reversal, closing in the upper end of its range. 1817, 18, 1833, whatever level you want to use. Any weakness in RealPage, I think, can be bought as an investment. This is a name that's got good revenue growth. Institutions are coming for it. I really like this RealPage, RP. I say institutions, here it is. 186, 214, 218, 233. That's what you want to see in a stock like RealPage. But just because we like it doesn't mean it's guaranteed to go up. So while a pullback to the 18.5, 19 level I think could be bought, if it falls under 18, you get out. Hope that was simple. Mattress Firm, MFRM, slowly starting to sell off. Lighter volume to the downside than we've seen to the upside. It's at the 20-day moving average. If you're a trader and you think the market's, done pulling back, use the recent low right here, $30.85 it bottomed out at. Today we bottomed out at $30.96. Use this area, which coincides nicely with the 20-day moving average, as your stop. You could get long. From an investment standpoint, stocks extended. I needed to pull back closer to the 28 area. 27, 28, and this will be on our focus list. Abiomed, ABMD, medical device company, assist and replace the pumping function of the heart, pulling back for the 4th day in a row. I need more. $20. Pulls into 20, you get long at 20. You put a stop at a close under 19. QLIC. At the World Money Show, this is the name we're talking about. Institutions love this stock. Look at the weekly chart. 244, 356, 385, 436. The institutions are coming for this computer software play. Computer software has been getting a lot of attention. This is a name that ultimately I think could be bought out someday. But they came out with a good quarter. Wasn't good enough. It sold off. Found support at the 200-day moving average. I think QLIC is one you can look at from an investment standpoint. 27, 50-day moving average, that's your eject level. The closer to 27.5, 28, the less your downside risk. But QLIC, even here, is a name that we like. The restaurant stocks continue to work. We've been on this trade for the last couple of months. Buffalo Wild Wings moving up again. We talked the other day from a trading standpoint about taking a shot at shorting this thing. If you did so, you should have been using the recent high as your stop. You should have got stopped out for a loss. If you are looking to buy this stock, wait for a pullback. Even though it broke out today, we do not chase stocks that go like this. Let them come in. They always do. Panera Bread. That's one that had a great quarter, pulled back. So when that comes in towards the 145, 146 range, you get long and use the 50-day as your stop loss level. Chipotle Mexican Grill, moving up, hitting a new high. Too far extended, but definitely a name we like longer term. BJ's Restaurant had a huge run into the earnings. Good earnings report. They sold it off on profit taking. Was not unexpected, but needs more of a pullback. Let it come in a little more. You could take a look at BJ's. Red Robin Gourmet Burger, the newest retail restaurant stock of ours. We liked it into their earnings the other day. We had it as an earnings play. They shook the tree yesterday, providing a great opportunity to get long. Moved up today. Red Robin Gourmet Burger is a name I think is going to get the restaurants in there. It's a name you need to look at. And Dunkin' Brands, probably my favorite new name in this space. Dunkin' Brands, again, got above 30 today. I don't know how much more direct I could be. This is going to be a big winner. That doesn't mean you have to go buy it at 30. Let it pull in. But when they do, be ready to buy. I know when they start dropping $2 and $3 in a couple of days, you get nervous. The stock has proven itself already. Wait for a pullback, and then you jump in. Joy Global, JOY, we mentioned it as a possible trading opportunity. I just wanted to let you know that they have earnings coming in a week and a half on the 29th. So that's a name you could put on your radar. That could be an interesting play. Zanga, I got an email today. Hey, did we miss the bounce off of Zanga? No. We made the easy money. This is the hard money now. I still think the stock pulls in with the market and you could get long cheaper. But again, 20-day. This company doesn't even have a 50-day. Zanga is a name that it's overvalued, but the institutions like it. I do think it can go higher, but I'm not going to buy it here. I want to own it closer to the $10.50, $11 area. Okay. Listen to our other videos, please. There's other. If you're not listening to the other videos, you're missing some great plays. RAIL, the earnings playbook, is geared towards trade. Freight Car America, we've mentioned it 6 or 7 times in the last couple of weeks. The last 2 or 3 days on this pullback, it got downgraded. We said that was a great opportunity to get long into earnings. Whether you bought the $20 calls, 22.5s, or 25s. The $25 call options, you could have bought the day after we mentioned it again for like the 4th time. You could have bought them at 20 to 25 cents. At one point today, they were $2.50 for a 1,000% gain. This is how you make money in the market, everybody. When you're wrong with earnings, you lose everything. But when you're right, you can make multiples on your money. Rail America, the Freight Car America is one we nailed cold. That's my little patting on the back. What's the next one? I don't know. But ones that I'm betting on, Smart Balance, buttery spread. It could not be more boring. The institutions like this name. Okay? I own the $5 call options. I own some stock. I own the $5 call options at 60 cents. We still got another week and change before they come out. But Smart Balance, SMBL, is one I like into earnings. Maybe that's one that you can look at. Speaking of, we got the stocks under 10. Blue Dolphin. I mentioned it today. No, we don't buy it. It's extended. This is a name we started talking about in March of last year when it was pennies a share. It's moving now. I wouldn't buy it. You need it to pull back. We discuss it in the stocks under 10, along with other names like IPAS, which we've been talking about for the last week or so, moving up again today. Even today, this morning, you had an opportunity to get in there at the level we spoke about, and you had a beautiful run. Heavy volume in IPAS, GRVY. These are the types of trading opportunities you're missing. We flagged this one 2 days ago. Continues to move higher. Another name I bought today. We're expecting an FDA review board. I hope it's not too late. I don't know when it's coming. I don't know if it's coming. But Vivis develops therapeutic products addressing obesity. They have a diet pill. Okay? They went in front of the FDA board. They needed more information a year and a half ago. If you look at the weekly or monthly chart on this thing, it's crazy the way this stock could move up and down. Here it was 09, it ran from $2 a share up to 14. This is a stock that it's a hero or zero. Take a look at some upside calls. I have them at different strike levels, but in particular one, which is just, you want to talk about a crapshoot? I picked up some March $20 calls for 30 cents today. I know I put in my couple $1,000s that I'm willing to risk, but if this thing runs up, it could go. If they get the approval, this could go to $20, $22, $25 a share in a month. So VVUS, just putting it on your radar. I'd like to see a pullback. We have to see, but it is very, very, very speculative. Call it a crapshoot, okay, based on approval. I think the market's poised to go a little lower. Look for ideas. Deckers, DECK, gave us the lift today. I'm sorry, why didn't that pop up? Gave us the lift today right up to the 200-day moving average that we talked about yesterday. So you had an opportunity to get in, whether it's at 92, 91, 90, close at 89. I think Deckers, First Solar Energy was a huge runner today. First Solar, a name, for those of you from the World Money Show, if you don't mind giving me 10 seconds to pat myself on the back again, at $170 a share. The stock went to $175. At $170, we were short this stock, and we held it all the way down to probably $50 a share. stayed with it, added to the position, covered, and have been looking for an opportunity. We've traded a couple times to short side. First Solar, nice lift on news of them being able to build the thing, but $50. $50 has been resistance. If you get any sort of follow through to this rally that started today, 47, 48, 49, I think you could short First Solar. This stock also, in my opinion, should be going much lower from here. Tesla, like I said, if the market's open, you could short the stock. LinkedIn, LNKD, another one that's setting up nicely. 95 is your stop. That's really it for the playbook for tonight. Thanks for your time. Have a good 3-day weekend, and I'll talk with you on Tuesday.